if you just strip out all the noise of the economy and you just focus on Bitcoin, I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. I've been saying $180,000 in the fall of 2025 for a while now, and I think that that's still very much in play.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. James Lavish says $180,000 Bitcoin price is easily in play. He breaks down why BTC's next big move could be massive, covering market trends, adoption, and key catalysts. Let's dive in.
You have the massive money printing, and suddenly Bitcoin is taking off again. And I thought, well, wait, there is something to this. I got to do my own research. And so then I started doing things like this. I've listened to these podcasts. I'd listened to Michael Saylor and Preston Pish and, all of the, Peter McCormick, and just started listening to the real experts in this space who truly understood what Bitcoin was and how it was such a strong store of value and something completely different than anything we'd ever seen, solving the Byzantine general's problem, that kind of thing. And then I was listening to a podcast with Pomp, and he was talking to Jeff Booth. And this is the moment, this is kind of the seminal moment for me, because I had bought a bunch of other things, actually, let's rewind a little bit. What had happened is I was leaving my hedge fund, and my son, who was at Cornell at the time, he was surrounded by a bunch of really smart guys in the engineering and computer engineering kind of space and, that department. And he told me, he's like, hey, look, we're trading around this crypto stuff like daily. I think there's something here for you if you wanted to focus on this as your next path in your career in investing. I thought, well, yeah, I'll check it out. And so I bought all the hit players, the Solana and Cardanos and ETH and a little bit of Bitcoin. And then it took me about maybe 3 to 4 weeks of really digging in to realize that all the other stuff I had was either garbage or I just didn't understand. And so I transferred all of that capital into Bitcoin and really started focusing on Bitcoin and listening to those podcasts. Now get back to where we were. My money's in Bitcoin, and I'm kind of feeling like this is the path, but there's just something missing. I'm like, there's just something that I'm not putting together to get my full faith in it. And then Jeff Booth is talking to Pomp, and he's explaining this, this battle between inflationary pressures of the Fed and central banking and the Treasury and deficits and all that versus the deflationary pressures of technology and technological advances, which should, lower the price of everything and give you abundance. And these are clashing, and they're about to just really clash hard. And then we see it in 2020, March of 2020, we had seen that. So now I think back to March of 2020, I was like, that's it. That's where Bitcoin is the key, is that it gives us a path out of this madness of the fiat system. Now, remember, Alan, I come from the institutional space. So my attitude was, well, the fiat system works because it worked for me, worked for all my colleagues and friends. So it works. No, it doesn't work. It's completely broken. And it finally opened my mind to, oh my God, this is something I've got to be focused on. This is where I want to put my energy, in this space and on Bitcoin specifically for the foreseeable future.
Robert Kiyosaki, the renowned author of Rich Dad, Poor Dad, has once again made waves with his latest prediction of a giant crash in financial markets. He warns that all major assets, stocks, bonds, real estate, gold, silver, and Bitcoin, could see a sharp downturn. However, unlike many who fear a collapse, Kiyosaki remains firmly bullish on Bitcoin, believing it will be the fastest to recover and soar to new all-time highs. Rather than selling off his Bitcoin holdings in a downturn, Kiyosaki has made it clear that he will do the exact opposite. If Bitcoin crashes, he plans to back up the truck and buy more. To him, Bitcoin is digital gold, a hedge against what he calls the ongoing collapse of the everything bubble. This aligns with his long-held belief that fiat currencies, particularly the US dollar, are fake money, artificially inflating asset prices while making life harder for the middle and lower class. Kiyosaki has been vocal on social media, urging his followers to ditch dollars and start accumulating real assets like gold, silver, and Bitcoin. He argues that saving in fiat currency is a losing game, as inflation erodes purchasing power, making essentials like food and gas increasingly expensive. Instead, he views Bitcoin as a safe and smart alternative, a form of money that governments cannot manipulate at will. As Bitcoin inches back toward $98,000, Kiyosaki's confidence in its long-term resilience remains unshaken. For him, Bitcoin isn't just an investment, it's financial freedom.
Why would we have a referendum on this last administration about inflation, the problems and the frustrations and the challenges that so many people are feeling and are facing? And so where does that come from? And that's it. You just hit on it. That's the confusion, is that you've got kind of two economies going here. And so much of it has been fiscally driven from these deficits and the money printing that we had back in 2021, 2022, or 2020 to 2022, where the Fed, stepped in. They teamed up with the Treasury and they expanded the Fed's balance sheet by $5 trillion. I mean, they basically doubled it. And so, you go from, and then that's the issue right there. And what do? They go into the markets, they buy treasuries, they buy, some mortgage backs and other things. And it basically injects capital into the economy. So, but that really causes a lot of asset inflation. The consumer inflation was caused clearly by, we had bottlenecks and some issues because of all the lockdowns, but we also issued checks directly to consumers and they spent that money, and that was a lot of money. So that was part of it. But then the wages just lagged and lagged and lagged. And now there's kind of two issues going on. First, you've got the CPI number, and the consumer indexes that they use to measure inflation, they're flawed at best, problematic. They don't really clearly capture what's going on. I mean, if you tell me that my insurance went down this last period, you've got to be kidding me. I mean, I was scrambling to reinsure my kids' cars, to have them reinsured, because it had doubled in just this last period. And we're talking thousands and thousands and thousands of dollars. This is just insane. And they both have perfect track records for driving. They just decide to raise. Some of that happens, period to period with insurance companies. That's how they do it. But the reality is, if you look back over the number of years, over the last 3, 4, 5 years, that number has risen dramatically, even though we had changed providers. So that's just one instance. You've got health insurance costs, you've got the cost of auto insurance, you've got which we just talked about, you've got cost of maintenance, auto maintenance, like all these things are just rising, and they're not rising at 3%. That's just absurd. And that's part of the issues, that measure is flawed, and everybody knows it and they feel it, right? So and the wages, therefore, they say the wages are keeping up. They're not really keeping up for the average person. Okay, so that's one issue. The second issue is that you've got all of this demographic, this top demographic that has assets. They own assets, and they have benefited from all of that money printing and the asset inflation.
The rise of quantum computing is sparking fresh concerns about Bitcoin's long-term security, with River CEO Alexander Leishman warning that the cryptocurrency could be vulnerable. According to Leishman, Bitcoin's security is entirely reliant on private keys, and if a public key is ever exposed, a sufficiently advanced quantum computer could crack it, giving hackers access to funds with little effort. He describes this as the most highly profitable attack a quantum computer could perform, should the technology reach that level. However, traditional banking systems appear to be far less at risk. Leishman explains that while quantum computers could theoretically break encryption methods like HTTPS, which protects online communications, banks have multiple security layers in place. Attackers would need to bypass firewalls, enhance protections, and manual oversight to gain access to funds. Moreover, banks rely on KYC, Know Your Customer regulations, making it nearly impossible for hackers to move stolen millions without being detected. While the threat to Bitcoin is theoretical for now, quantum computing may be closer than expected. Microsoft recently unveiled the Majorana 1 quantum chip, claiming that the industry is now just years, not decades away from large-scale breakthroughs. With Google and IBM predicting functional quantum computers by 2033, the crypto world must prepare for a future where Bitcoin's current security model could be tested like never before. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.